Hello everyone and welcome to today's Daily Report Market Analysis videos with me, Richard, Pro Market Analyst at Hantec on Tuesday the 10th of March. Been a bit of a turnaround on markets today. I mean, coming after the rout that we had on markets yesterday, it's not a major surprise that you've seen some sort of a rebound from that. But the talk of stimulus from the US President Donald Trump and also potential for Japan to engage in a stimulus. You've got the UK giving its budget tomorrow. Again, that could include some sort of stimulus measures. We've seen broad risk picking up. Look at this VIX. Wow, it hit 60 yesterday. You have to go back to all the way back to 2008 as to when it last got to that sort of level. But it's back lower a bit today. So VIX volatility, again, responding to, this prospect of stimulus. But is it the bottom in markets? Well, it's so difficult to say, but there was a massive sort of culmination, seemingly a culmination sell-off yesterday, where there was a capitulation move into treasuries, out of equities, and that's a bit of a turnaround today. So Treasury yields are 72 basis points on the 10-year now. They closed yesterday around about 50 basis points. So already added 22 basis points to that. So a really significant rebound on the 10-year Treasury. You've got S&P 500 futures. Well, okay, first of all, the Dow yesterday closed 2,000 points lower. I do believe that that apparently is the fourth highest percentage sell-off ever. And I think, I can't imagine that you're going to get too many days that were more than 2,000 points lower. Maybe 1929 would have been one, but I don't know. But anyway, the S&P 500 down 7.6%. S&P 500 futures now up 4%. So we are getting some sort of turnaround, but again, not really in the realms of what we saw yesterday on the downside. The oil price has rebounded today. We are currently looking at some pretty decent rebound on oil, over 5%, 5-6%. Was 8% earlier, so it's just pulled back a bit from there, but still a reasonable rebound on oil. I say reasonable given the context of this massive sell-off yesterday. It still doesn't really even touch the size, does it? So we still need a significant recovery across all these markets in the coming days to even suggest that this is any sort of decisive bottom being seen. You say a decisive low or the low. It's impossible to know at this stage how coronavirus is actually going to affect the global economy. Obviously, we're seeing the Western economies now really being affected. Italy in complete shutdown. You're seeing the virus spreading throughout the US, and surely France, Germany, Spain, the UK in Europe are going to be hit at some stage, and exactly how those affected economies are affected as well remains to be seen. But that's the problem. We just don't know, and whilst that uncertainty is there, we can't really call the bottom with any real confidence. So we're still looking out for volatility, I think, to play out in the days ahead. But certainly the markets are up today, but whether it's up sustainably or not remains to be seen. So in terms of how Forex markets are looking, well, we've got the dollar rally, dollar rebounding today with Treasury yields, really. So that dollar move is certainly going with Treasuries, and dollar is positive against everything. Yen being the underperformer, down 2.2%. The Kiwi, Aussie and Canadian dollar being the relative outperformers, leaving the dollar aside. So that certainly points towards a risk rally. But again, how long that lasts for remains to be seen. Gold is lower by just over 1% now. So interesting signs of profit taking coming through there on gold. I'll talk about the technical implications of that in a bit. But yeah, broadly speaking, we're looking on a sort of a rally in equities, rally in dollar. But can it last is the question. In terms of data points today, not a huge amount again. We had Chinese inflation basically in line overnight, and then we're looking out towards 10 o'clock with the Eurozone data for the final reading of Q4 GDP, expected to be 0.1%. but broadly speaking, not a great deal there. Now, my chart of the day is silver. What we've seen in silver is, well, silver, if you look at the metal itself, it's an industrial metal, but also a precious metal. So it sort of has qualities of both, but certainly it has been more depressed than that gold rally that we've seen in recent weeks. Silver has been relatively subdued with its industrial elements taking hold. But you look at this and you think, well, this is a trading range, isn't it? There's not really a great deal of direction on a medium-term basis. 1650 seems to be the floor. Anything around 1840, 1819 figure seems to be resistance area coming in. We've rallied towards 1735 and rolled over, so that is seemingly a mid-range pivot, and you can argue that that is the case across the course of since August, really. But a little bit negative bias, nothing too major. You're underneath 50 on the RSI, so just sort of ticking lower, really. MACD and stochastic still falling, so you'd sort of still suggest there probably is going to be bias towards a retest of 1650 again, pressure to the sort of bottom of that range, but nothing too decisive. So silver is an interesting sort of, I mean, you'd say that in the context of how other asset classes have formed and other assets, silver is fairly quiet, but generally speaking with a slight negative bias, as I said, trading in the sort of bottom half of this near-term range. And you can see the resistance, 1757, 1735 was that pivot, so there or thereabouts, anything towards that seems to be sort of limiting. Momentum indicators on the hourly, fairly well contained, really. Again, slight negative bias, but without any real decisiveness. So you'd say sort of anything but towards the near-term pivot, 1750, selling pressure, and then maybe attraction towards 1650. But generally speaking, silver seems to be relatively subdued and quite quiet, actually. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.